All right, guys. Well, it is great to see everyone in the house. We have Zoom open and we have Clubhouse open, and it's my understanding that the people on Clubhouse is trying to mess up our night. I see that there seem to be server issues. So anyone on Clubhouse right now, if you feel more comfortable, come on over here to Zoom. We are on. You do not need a passcode. You see the flyer right there in my bio pic. I just don't want you to miss out on any information. So if anyone wants to get a pen and paper, the Zoom code, I will share it with you, is 973-5106-7262. Again, 973-5106-7262. You can grab it still in my biopic. Just don't want you to miss anything. Um, Clubhouse don't want to act right tonight, but I rebuke them in the name of Jesus. All right, guys. Awesome, 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 awesome. All right. So let's get started. All right. I promised you guys we were going to start on time. I am so happy to see each and every one of you, whether I'm seeing your face or whether I'm just seeing your name. It is an awesome thing. So good evening, everyone. We are discussing life insurance with living benefits. Hope you all can hear me well in both places. I am known as Lady G. A lot of you know me as Lady G in my other rooms. I am a serial entrepreneur. For those that do not know me, I have 5 businesses, and one of them, I'm a funeral consultant. So I sit down with the families when they have lost a loved one, and I'm trying my best with God's grace to get them through the process, because it's tough, and it's tougher for people to walk through that funeral home and make decisions. So with that said, um, I am also a licensed financial professional. So I am out here in these streets, going state to state, trying to get people insured. I'm on a crusade. I really am on a crusade. Um, but my crusade takes a village. I cannot do this by myself. So everyone that is listening to me right now can help in some type of way, whether it's making sure that you get a policy, or you know family members that do not have a policy. You can help the crusade by having the talk. Whatever information you get from here today, I need you to take it and share it. Take it and share it, because if you hold on to it, nothing good will come from that. Um, we do so many things, but we need to know when it's time to help those in the community. So I am here to plant a seed and let God do the increase. We are so quick to say we can't afford insurance, but it is my belief anyone that says they cannot afford life insurance has not gone to get a quote, because there is something for everyone's budget. But as I'll talk a little further down the line, you're going to see why you shouldn't wait. We are so quick to wear name brand sneakers, paying hundreds of dollars for that, Louis Vuitton shoes, paying $40 for a Grubhub meal, paying $100 to go to the movie theater. If anyone's here in New York with me, that's what you're paying. If it's for 2 people, time you buy snacks and the tickets, you don't spend $100 and got nothing from it. What did you get from all those items I just mentioned? Did you get anything from it. It wasn't no type of investment. No type of investment. An investment is something you put your money into and it doubles or it triples. You get something out of it. So the only thing you got from getting that Grubhub order was wider hips. Some of us get it quicker than others. But those rundown shoes are now, after a day of wearing them, not worth what you paid for them. So I want everyone to think about when it is time to get an insurance policy, which is today, which is immediately. You can use a policy to pay for your college tuition for your child. You can help create wealth for your retirement and so much more. And you're going to hear how you can do it tax free. Do you guys get it? Tax free. I want you to understand and make a decision to do better. So we are not no longer borrowing from Peter to pay Paul to bury you. And I'm here as Lady G to say, someone done told you a lie. GoFundMe is not it. We have to do better. If you guys don't know the history of GoFundMe, it was created for business owners who are trying to find startup funds, and somehow it was turned into the funeral funding account. We need to stop. It's embarrassing. So we have to stop. We need to get our stuff in order. So I am happy to say that I'm also joined by other speakers today. We have the lovely Shantae Singleton, who is also part of this crusade with me. We have Mr. Arthur Jones, who is a trust professional. He's going to speak to you about getting a trust in order. And then we have the beautiful Irma Castillo. She is a nurse, and she's going to tell you her viewpoint from working with people with illnesses. So I would love each one on every platform, hold your questions. You can, those that are on Zoom, you can jot the questions into the chat. And then those on Clubhouse, you will have a time to raise your hand and come up and ask your question. So let's begin. Where do we begin? Life insurance with living benefits. What are the living benefits? One, the cash value. Each type of policy gives you some type of cash value, whether it's little or a lot. Terminal illness rider. Terminal illness rider is if a doctor diagnoses you with less than 12 months to live. You can call the insurance company and they will cut you a check up to 100% of the death benefit. So if you have $1 million policy, they will cut you a check up to $1 million. If you add on a critical illness rider, that is if you fall sick of a heart attack, a stroke, cancer, Parkinson, blindness, HIV, AIDS. One phone call to the insurance company and they will cut you a check for up to 90% of the death benefit. So if it's $1 million policy, they will cut you a check up to $900,000. Then you have chronic illness rider. And that is if you cannot do 2 of the 6 daily activities of the day. You can't feed yourself, you can't clothe yourself, you can't bathe, you can't shower, you can't put yourself to bed. One phone call to the insurance company and they will cut you a check up to 90% of the death benefit. Again, if it's $1 million policy, they will cut you a check up to $900,000. So while you are falling ill and may not be able to go and report to your 9 to 5, and now worrying how you're going to keep the roof over your head, you have access to cash with one phone call in your life insurance policy, as long as you set your policy up with the correct riders. Another rider, there is a premium rider that you can add. You might not be able to go to work, but how's your life insurance going to get paid? You're working with an agent, make sure you ask them for the premium rider. That will cover you. Some companies do it up to 10 years. Some people do it past 65. But the point is, if you ever cannot work and pay your premiums, your policy will not lapse. All the hard work that you paid into it will not be gone just because you fell ill and could not make that payment. So you ask for that rider. Another rider, long-term care. If you ever was to fall ill where you need extra care, we know family members that may have needed home health care aid for extra hours. This rider would help pay where your health insurance will not. And the only thing I'll tell you, if no one else has told you, when you add that rider, you're paying out first and you're getting reimbursed. They're not putting out first. And they will not give you terminal and long-term care because they're kind of the same and helps with different benefits, but they're somewhat the same. The next thing is the different types of life insurance. You have term life insurance. The two most famous ones that you will hear from, you could turn on the TV right now and see a commercial for term and for whole. Term, I'm finding that people do not know what term is. Term is exactly what it sounds like. It's temporary. You will not have it your entire life. You purchase term in 10 years, 15, 20, 30, they now have 40 years. When that 10, 15, 20 years is up, you don't have life insurance. There are term companies that will tell you your term is almost up. Do you want to go into another term? You're throwing money away. First of all, if you say yes and they put you in one, you're paying higher the premium because now you're older. The more you play with that term, the more money you throw away, and you're going to have to keep going. Because my thing is, if you know it does not last you your entire life, and I don't know if I have any Christians in the room, but we are so quick to say, Lord, keep me from illness, keep me healed. But then you buy a 10-year term. That's contradictory, because if you're telling him to keep you from all diseases, why are you buying a 10-year term like you betting for you to die in 10 years? The reason I find that people buy term is mainly for two reasons. One is because it comes across cheap and because you don't have to do the health exam. Now, when it seems too good to be true, sometimes you have to know that it is. There is no cash benefit with term. There is companies out there that will try to sell you term and tell you that you can also use an investment vehicle. Everybody's financial situation is different. If you have money to just put away like that, go for it. But if you want to be conscious of where your money's going and not be left 10, 15 years from now looking for permanent insurance because that term has ended and now you're older, because premiums increase every year you have a birthday. If you don't do the term, it's because you can afford permanent. The only reason I put my clients in term is because they absolutely, under no circumstance, can afford permanent. Otherwise, I don't want you out here walking naked without anything. The whole point is to have your family in a situation that they can, if something was to happen to you, they can grieve in peace instead of wondering how they're going to pay for your services. Another one is called group life insurance. And there may be some workers that work for companies in the room, and you were hired and they said, we're going to give you life insurance, and it's 2 to 3 times your salary, and you don't have to pay a thing for it. Sounded good. Y'all was happy. Wasn't even looking for insurance, because why do I have to pay if they giving it to me for free? Because the minute you leave that company, whether you quit or you get fired or you stay until you retire, you walk out the door, that insurance stays with them. You do not have insurance. So now you're older, hunting for insurance. And if you stayed until retirement, you're now in your 60s and going to pay a much higher premium. And who knows if your health will even qualify you. So if you have term and if you have group, I really wish you'll reach out and get a quote for permanent life insurance, because before it is too late. We don't know from day to day if something can happen, but if it does, at least you'll be covered. Then we go into, and by the way, your group life insurance doesn't have no cash benefit either. So you're not getting nothing out of it. And we also, this is a great time for me to bring up peasant insurance. Your company can have insurance on your life and you wouldn't be getting anything out of it. They have insurance in case something happens to you, they get paid out a check. So why would a company get an insurance policy on you, but you guys can't get a policy on yourself? The next one is, now we're going into the great scenario, the permanent life insurance policies. We have whole life. Whole life is for the person who says, I want to make sure that my family doesn't worry. I just want to have a permanent policy. Whatever's remaining goes to my beneficiary. The death benefit never changes. Your monthly payment never changes. You have it until you're 100 years old. You are not promised to have any cash dividends on it, but there may be some cash accumulation, which, if there is, it's tax-free. You could take it out and do what you want with it. The next one is universal life. Universal life is for the person who don't know which way they're going. They can be 20 and say, I just want to make sure, I know getting insurance is the right thing to do, and I want to make sure I'm covered, but I'm at a point in my life, I don't have kids, I'm not married, I just want something. So they go, they get $100,000 policy. But now, 15 years later, they have kids, they get married, they have a house. So now they need more. They can increase from 100 to wherever they want. And then you have the person who may be 60, maybe had $1 million policy and says, the kids are out the house, I done sold the house, I don't need all this insurance. So they want to decrease down to 500,000. They have that flexibility. So whenever you hear universal, just think of, you can change it whatever way you want to go. So if you feel like you're paying too much a month, you can call the insurance company and say, I want to bring down my insurance. If you feel you ain't got enough, I want to bring up my insurance. And that is what universal does for you. Then we have index universal life. Now, index universal life is for the person that says, I look for investments and I want something that's more solid than the stock market. I want something that's more solid than going to put money on the lotto. I want something that's more solid than driving to Atlantic City and putting it on blackjack and roulette. I want a little bit more guarantee than that. Well, an index universal life gives you that, because with an index universal life, there is a guaranteed component that you are guaranteed, if it's 0.75% to make, if that index is in the negative. If you guys are in the markets and watch the stock markets during COVID, people lost money. The only people that did not lose money is that people that had money in life insurance and in IULs, because of the guarantee component. So I always say, for the person that's looking to feed an IUL correctly, that is a great investment tool. Why? Because you have the flexibility. With one company, they may give you a cap of 15%. So you have from that 0.75 to 15% of compound interest. That's cash. That's a money cow. The same way you go and charge something on your credit card for $100. If you only make the minimum payments, you have way past paid that $100. You have probably gave them $200 and $300 for that if you continue to make minimum. Why not take that same component and use it in the positive in your behalf? So if you have savings accounts, I can guarantee you're not getting more than 1%. You're getting point something in that savings account. You have $1 million sitting there. Where's the room for growth with your wealth? You're getting just that, less than 1%. When if you put it in an IUL, you have that room and flexibility to make up to 15%, some companies 25%, some companies give it to you with no roof at all. So that million can be tripled, and the compound interest is amazing. I can't express it enough. When I do my one-on-ones with people, I show them how their number will double and at what point, at what year they'll have this much cash. So that is a benefit of IULs. The next one that you have is final expense. Final expense is for the person who says, I don't want to leave nobody nothing. I just want my services to be paid for. I hate everybody, ain't trying to leave them $1. So they can get a final expense policy and it'll pay for their services. That usually goes up. Different companies do different things, but typically between 30 and 40,000 you can get. That's the most. And that'll pay for your services, and whatever is left over will go to your beneficiary. So again, go back to term. Term is like renting instead of buying a house. So do you really want to put all that money? I tell my clients, it's like paying for term is like putting money in a bucket. And if you happen to see that bucket overflow, you have just outlived your policy. So we want to make sure that we don't do that. So you're aware, insurance companies today have improved. You can be insured up to between 80 and 85. Whole life insurance, you can get up to 80 years old. Index universal life, you can get up to 85. Whole will cover you to your 100. Index universal life, if fed correctly, can cover you up to 121 years old. So we need to make sure that we know what policy we're going into and that we get insured. And please, if you have children, please get policies on your children. First of all, it's teaching them about creating wealth, depending on the type of policy you get, but just teaching them responsibility. And then when they're 18 and get a job, it's my belief, tell them to take over the payments. It'll teach them responsibility. A child can be insured from the time they become 12 days old. And I believe that you should get it right then, because you never know what can happen. If they fall of an illness, that can disqualify them from getting insurance, you wouldn't have to worry about it because they had already been insured. Same with us. Let's go into another portion of the living benefits. Earned income accounts is your checking, your savings, your 401k. When you have money in your 401k, let me talk to those that are looking forward to retirement. You get to retirement, and all this time, they've been taken from your paycheck taxes, Social Security taxes. And they said they've taken them because they want to give you an income when you retire. So you happy. You're going to have Social Security, you're going to have pension to pay for your bills. First of all, inflation is so high right now. It's the highest it's been since 1990. We're about around 5.8 to 6.2% of inflation, the highest it's been in over 20 years. So you don't even know where it's going to be when you retire. But if you think that those 2 checks you're getting is going to cover you, then okay. My name is Lady G, and I'm going to tell you what Lady G thinks. Lady G thinks that there is somebody behind closed doors in government trying to figure out how to put a stop to Social Security checks. Why? Because if you do the history of it, it was never meant to be permanent. It was supposed to be temporary, and people started living longer, and before they knew it, they couldn't stop it. But there is a man sitting behind closed doors, I believe, trying to stop it. So there is a chance that when you retire, you may not get that Social Security check. Then I worked on Wall Street. I left Wall Street well over 14 years ago. And when I left Wall Street, they were already trying to stop pension. I talked to a client this week, and her company's talking about it too. So you're waiting on a pension and Social Security to think about settling back on when you retire. That might not even be there, which should be why you should be creating your own retirement bucket. But let's go back to 401k. 401k is your company done said, I'm going to match you. Whatever you put in, I'm going to put in. I'm going to match it. So you feeling good. I got this 100,000. I'm retiring. I'm getting the pension. I'm getting the Social Security. That's going to pay for my bills. And I'm going to use this 100 grand in 401k to go traveling and do what I want to do. Sounds good. But there's a little problem with that. When you take that 100,000 out, you ain't walking with 100,000. Depending on your tax bracket, whether you're 20 to 30%, you're giving 20,000 to 30,000 to the IRS. And you may walk off with 60 or 70 if you're lucky. But if that is not the kicker, let's go back to that Social Security that you was getting taken out of your check. If you have taken more out of your 401k that puts you over the income level for singles and married, they are taxing your Social Security. So what you think you was getting in a Social Security check will not be, because you are now paying double the tax. Now, paying double the tax, to me, just doesn't seem right. Why would I do that? I gave you it in the first place so that I could have a retirement fund. So you have a way to avoid that. And that is by taking your 401k and rolling it over into an annuity. Because if you roll it over into an annuity, when you retire, you can take the funds, okay, but it will not affect your Social Security. 401k, checking, savings, that's all earned income accounts. That is reported to the IRS. Anything reported to the IRS. People that know people that are in rent stabilized buildings that got to give a list of their income and their accounts. When you list that you taking out something from the 401k, your rent is going up. But if you had it in life insurance or an annuity, that would not take effect. If you get sued, where are they going for the funds? They're going to your checking, your savings. They're talking about your 401ks, your CDs. But what they cannot touch is your life insurance, your annuities. That is why we have to be smarter and wiser. And when we know better, we'll do better. And that is where I'm trying to get us. If something was to happen to you, the minute you pass away, I hear people say, I don't need life insurance. I got $1 million sitting in the bank account. What do I need life insurance for? Well, let me give you this inkling. That $1 million is sitting in your bank account. The minute something happens to you, someone walks to a keyboard, types in your name, date, and time that you're gone. The minute they do that, your accounts are frozen. Your family can't touch it. And that's why they do it, because they want it to go through probate, because they want to make sure if there's anyone that you owed money to, they get paid first. They ain't worried about your family being able to bury you. They ain't worried about your family being able to pay the mortgage that you left behind. They're making sure that people get paid. And guess what? Anyone can come and say that you owe them money. It's not the court's responsibility to share that you did not. They don't have to fact check or nothing. So if I want to come and say, Yvette, you owe me money, guess what? They got to give it to me. Not fact checking. So that right there is enough to make sure that I have my stuff in order. And that's where we're going to have talks about the trust.
I think you just.
But I want to make sure that you understand why you should look at these accounts. 401ks roll over to an annuity so that you don't have to deal with your savings, your Social Security being taxed, or when you pass away, your accounts being frozen. 529s. If no one knows what a 529 is, if you're a parent, you typically open a 529 for your child so that you can start creating an educational fund for them. I'm able to do 529s for my client, but what I first say to my client, I'll put you whatever you want, but I want you to hear me first. I do not recommend 529s to my client. I recommend you put that same money in an IUL. Why? Because the way these kids come out these days, they can come to you and say college is not for them and they don't want to go. And you done saved up this money. Now what you going to do? You could take the money, but you're paying taxes on it because you're going to be taking it for something that it was not supposed to be used for, which was the education of the child that was on that policy, on that account. So why not put that money in an IUL where there's no stipulations, where there's no restrictions? If they want to go to college, take the money out, let them go to college. If they don't, go on vacation, do what you want. But why give extra taxes to the IRS? We all have to pay taxes. The point is, I refuse to give them more than what they deserve. And they get extra because we don't know better. If your child decides to go to school outside the country, you can pay for it with the 529, but you're going to be hit with a penalty because they're going outside the country. So why would we do that? I suggest putting it in an IUL and then letting it go that way. And let's avoid probate. Probate can take 3 months, 3 years, longer than that. I just ran into someone, his wife passed, and he is still going through probate. And his wife has been gone now for years. She has properties that he can't even touch. He's still going through probate. Let me tell you, probate cost. There are fees, and all those fees are going to go out of the account that your money was in. It's going to go out of there, and the bill collectors are going to be paid. And if there's $1 left, that's what your family is going to see. Another thing I want to bring up is check your senior citizens policies. We are in a place, and I've seen it happen. You know how they say in our community, baby, everything's taken care of, the paperwork. I know who I want to sing at my service. I know who I want to do this, that. The everything is in the manila envelope, in the drawer, under the slips. Well, what happens when you go and get that envelope, which it happened to someone recently? They took that envelope to the funeral home. Funeral home called the life insurance company. Lady was nice enough to have two policies. Both policies had expired. So not only am I at the table grieving the loss of a matriarch, we now looking at each other trying to figure out how we now going to pay for this service because we thought we had two policies to pay for it. So we definitely need to look at our senior citizens policies to make sure that everything is ordered, because you do not want to get to a point where it's not. I think the last point before I bring on my speakers is, I think, two more points. Funeral expenses. I'm running into people that seem to be surprised on the cost of a funeral. So just so you know, and you could take these notes, you have to pay for the plot. In New York and New Jersey, cemeteries are running out of space. They're no longer given single plots. So now they're only doing doubles and triples. So even if they give you doubles and triples, it's obviously more costly than a single. You have to pay for the initial plot, and whoever the next person is that goes into the plot, you pay to reopen it. Now you've lost your loved one, you're paying for the service. So you're paying for, if you have the service 1 day or 2 day, you're paying the funeral home, you're paying for the hearse, you're paying for the driver that's driving the hearse, you're paying for the gas and toll for the hearse going through, you're paying for the limos, you're paying for the flowers. Funeral flowers are not cheap. You're paying for the coffin. That alone is like 5,000-7,000 if you get basic. Once they carry and bring the book out, you're paying 10,000 and up. You're paying for the prayer cards. You're paying for, sometimes they don't charge you for the programs, but you are paying $15,000 to $20,000 for a funeral service, which is what, when you don't have a policy, leads people to put up GoFundMes. And if you're having it in a church, let me just plug this. If you're not a member of the church, you should give a donation for having the services in a church. If you're having your family member's church and it's a third cousin removed, you should give a donation to the church. You could be a tithe payer and the church might say you don't need to, but at least ask. At least ask. I have clients ask me all the time, when we decide on a church, they say, what's the donation that we should give? And if I know the church well, I'll suggest. If I don't, I'll ask whoever the admin is helping me on it, or the pastor. What is it that you would like for having the services here? We need to get out of that mentality that it's a church and they just have to open their doors to us. They just might and might not ask you for a thing, but let's do things in decency and in order. The last thing I want to bring up, I think, is life insurance assets and why people use it. The wealthy use it. The banks use it. That same money you putting in your savings account and checking account, it's not sitting there waiting for you to come get it. The banks put your money in life insurance. That's how the banks make their money. So if you have a savings account getting less than 1%, they're putting it in that IUL. If they make 15%, they're keeping the 14 and giving you the less than 1. I have a list here, and it's over 800 banks, but I'm going to give you the top 10. Wells Fargo has $19.4 billion in life insurance assets. JP Morgan has $12.1 billion. PNC Bank has $8.7 billion. 6.4 billion is in Truist Bank. US Bank has 6 billion. Citibank has 5.3 billion. The Bank of New York Milan has 4.5 billion. Key Bank has 4 billion, and State Street Bank and Trust has 3.5 billion. What's the problem? Why can't you use the same vehicles that they're using to make money off of your money? The wealthy are putting their money there because they know the security blanket around it. They know if they get sued, people like Trump, and I'm not going to get into Arthur's thing. Arthur's going to touch on that. But people like Trump, they can sit there and act like they're going to file for bankruptcy or haven't paid taxes because they didn't have to, because they had things set up. So they have enough money here to act like they got something, but they know they had a whole lot more over here in life insurance that nobody can touch but them. We need to get wiser. So I'm going to stop there. I just want you guys to know and do better. I'm a financial professional to get you life insurance. You don't pay me a quarter, not a dollar. I give you the information, you do with it what you want. I get you into the policy, and it's just your responsibility to pay for it and not let it lapse. A financial advisor, you're paying like $600 a month to keep your money in place. And there's a whole different scenario there. You're getting you're paying someone to manage your money in a 401k or a 457, a 503b, a 529, IRAs, Roth IRAs, stocks. But you do not need to pay someone to manage your life insurance and annuities, your checking, your savings, and your CD. So while you think that Social Security and pension is going to keep you when you retire at the rate that inflation is going, good luck. And I believe, again, that there is someone trying to stop it. And I hope you're not in the place to be disappointed when and if they do, because it will be a bad situation. Before I pass on, I want you guys to take note of this. I want you guys to stop going to Google. They say if they want to hide something from us, they put it in a book. These are good books if you want to read up on what I'm saying to you. This one is called The Power of Zero. It's by David McKnight. If you have Amazon Prime, you can have it by tomorrow. It's not too late to place your orders. The Power of Zero, David McKnight. Then you have The Retirement Miracle. This one is by Patrick Kelly. Then you have Stress-Free Retirement. And this one is by Patrick Kelly also. And then you have Money, Wealth, Life Insurance by Jake Thompson. You want to read something? You want to know what's right? And go read a book and stop listening to Google that is man-made with man's opinion. Get into the books. Before I bring on Shantae, Arthur, I know it's burning in you. So I'm going to switch it up and ask you to come forth now and let us know about trust.
Okay, my sister. Look, you touched on a couple of really good ones, so I want to go ahead and bring it on into the dynamic. The dynamic behind the trust is keep what you kill. So what happens is, and I'm glad you mentioned Trump, because the dynamics behind the way that the trust really works is it removes you with your all capital letter name and all of your liabilities that's tied to it from your assets. So your mama sister was talking about you getting taxed on income. Well, trust, the things that come into the trust, that's not income. They don't even tax it the same way. And that's if your trust is public. So I like working with irrevocable, revocable. So you get the advantages of having a trust set up where you can make changes to it over the course of time. And then if you become incapacitated or if you pass, that trust locks down and becomes irrevocable and they can't go in and do anything they want to it. The way that it works is, and we're going to use Trump for example, the reason why he only paid $750 in taxes and he wasn't breaking the law is because he's a trust fund baby. So what happens is their family has a trust and it's on top of all of the ownership. Everything they own with Trump name on it, that trust owns it. And then the trust also owns the INC, the front facing company. This is where Donald Trump works as a W-2 employee. Y'all heard me, that man is a W-2. And if he pays $750 in taxes, that means he make less than a lot of us. But he don't need a whole bunch of earned income because he has access to every one of the assets under the trust because he's a beneficiary. Well, now he's a trustee. He gets to operate and tell the money where to go. But as a beneficiary, he gets access to everything the trust has. So what happens is he doesn't own Mar-a-Lago. He just lives there. And when he goes to California, he just lives there. And when he moves, wherever else he moves around, everything is owned by the trust. So he doesn't purchase properties. So with the golf courses or whatever they're building, or whatever they're bringing in, be it a residential or be it a commercial, he's going to go out, he's going to look at this property, he's going to get all of the reports on it, he's going to turn it in, they're going to have a board meeting. And him and his brothers and sisters going to sit down with the rest of the trustees for that trust, and they're going to decide whether to purchase this property and how to classify it. So just consider the fact that the dynamic, the way, the earnings. So like if you have student loans, they're all tied to your name. And student loans are a priority collector. Student loans, the IRS, these are priority collectors, which means they can make you take the equity out of your house. They can go into your 401k. But if you don't own it, they can't take it. It's just that simple. This is why Donald Trump can claim bankruptcy and still be a multi-millionaire many, many times over, because the company claims bankruptcy, not Donald Trump, not any of the other ones. And if y'all really want to get a good grasp on how the trust works, look at the Kraft family, Kraft. These people got one of the best trusts I've ever seen. It's a generational trust. And I'm going to I don't know if I can share what you call it, but the dynamic is the trust owns all of the real properties, all of the intellectual property, any land, any tradable instruments, any access or transmitting utilities, and they own all legal rights, the copyrights, trademarks, and patents. So at that level, all of those things are protected. Then they're managed under one of three subtrusts. They got a subtrust that's for a nonprofit, a subtrust that's for the corporate, and then a subtrust for the family. So what happened is all of these things will work together. And under the corporate trust, they'll handle all of the incorporations, all of the finance, all of the legal, all of the accounting, the human resources, customer retention, information and technology, marketing, contracting. All of those things that are viable for any company to run will be handled at that level. They also handle your risk mitigation, your taxes, all of your regulatory requirements, as well as the statutory and civil ones, that's state and your in customer action. They handle your loss mitigations for your profit and loss, your production, your spillage, all of your projections. All of this stuff will come from that dynamic. So now you can see how any company that they start under this trust is going to have all of the essential dynamics of running a corporation right from the start before they ever open the doors. They're going to mitigate any type of civil liability the family member has because they're not buying, they're not starting the business. The trust is, they just run it. So the trust owns multiple businesses. I tend to recommend where if you're going to set one up, you should be real estate and development, agricultural and farming, constructing and contracting, entertainment, publishing, electrical, plumbing and HVAC, healthcare services, food services, transportation, logistics, and maintenance. And the reason that those 8 are so key because those are some essential points in life. Everybody in any family is going to need somewhere to live. They're going to need food. They're going to have to eat. They're going to need healthcare services of some kind. So these things are kind of essential. And what the trust does when it's established is if these things are not internal, they outsource them while incentivizing them. So remember when I said that it was divided into 3 pieces and you have a corporate, you have a nonprofit, and you have a family. So This is where you incentivize those family members who are covered under the family trust through your nonprofit. So your nonprofit, if anybody's familiar how nonprofits work, they're funded through the programs that the nonprofit runs. So it could be science, technology, engineering, literacy, arts and music, mentorship, leadership development, community development, just any vast number of things. But if your family needs it, now you can incentivize it with a program under that trust, qualified for federal government grants, qualified for private grants, qualified for other nonprofit grants to that trust. Y'all learning a lot about how the Clintons work right now. These nonprofits, you can fund those things through that nonprofit and incentivize the members of the family to go into those dynamics. Like Roger Clinton has a construction and logistics company. This is how this works. This is why these families keep the money cycling back and forth through there, because everything that is spent is generally spent inside the family. They don't let a lot of money go outside of the family. Everything keeps revolving in, and they bring money in through the front-facing companies that actually do business with people outside of the family, and then they incentivize or bolster their ability to provide services for their families under their nonprofit and under their family trust. So under the family subtrust, it would cover everything from your birth services, early childhood development. You ever wonder why these kids never go to a public school? Because it's already funded through the family trust. And I want to point out something. Birth services includes 2 life insurance policies. The minute those children are born, there are 2 policies put on them. One of them payable to the trust. Did y'all hear me? One of them payable to the trust right from the start. So the family will always get a kick of funding, no matter what the circumstance is. So when an elder passes, now this money goes into the trust. And what does it do? Fund all of the family dynamics, birth services, childhood development, K through 12, socialization and ethics, health services, housing. And I'm going to make a distinction between housing and property, because property is handled in another place. That is something to create income for the family to benefit from. Housing is where the family live. And the way that is handled is, say, Miss Julie, or say Lady G, we're gonna go out and buy a house, but Lady G ain't gonna go out and buy the house. Lady G gonna go look for the house. She like the house, she gonna submit a report, and then the trust is gonna purchase that house, and Lady G gonna live there as long as she want to. And if Lady G decides she wants to move from that house to another house in Hawaii, she gonna repeat the process. And that house that she purchased already, we either going to lease that so it becomes an income-bearing property, but in most cases, they're not gonna sell it. They just not. They don't sell those things. They keep them inside the family so it keeps bringing income inside the family. See how this works? Now, your trust is a beautiful thing. It is really a beautiful thing. And it's one of those things that only 5% of the people in our society actually use. And that 5% correlates with the top earners in our country. The millionaires and billionaires, these are the people who are using them. Look at your Supreme Court justices. Somebody go in and type in one of your Supreme Court justices and type family trust behind it and see what comes up. The trust adds levels of protection, status corrections for the members under the trust. So let's say that the trust owns the vehicles for the family, and they are registered to the trust. They ain't registered to the person riding in them or operating. They're registered to the trust. So the tags and everything comes up registered to the trust. The trust can actually have an estoppel notice. That means regular police officers can't even stop the car. But on top of that, because that property, that vehicle that's being operated is owned by the trust, it limits the ability of the driver to access different parts of it. So say you're operating that car and some officer goes, hey, well, can I search the vehicle? No, what you can do is call the trust attorney. That changes that dynamic a whole lot, doesn't it? There's a reason that trust fund babies don't go to jail. There's a reason that they are in places where they are almost untouchable. They can commit crimes, but it's very hard to bring those crimes or bring the responsibility against them civilly because they're operating in a private capacity. And that's what that trust does. It sets up a private capacity where the assets aren't directly tied to any one person, only the benefits. Y'all get that? Flash your mics on the social media if y'all understand where I'm going with this. All right.
They did a good job also.
Yes, they did. They did it.
Hold on, Arthur. Let me let them know. And you try to get in because I don't want the people on Zoom to miss it.
Yeah, I got kicked out. I'm gonna try and sign back in here.
So there was a question, guys, posed on Clubhouse, and Arthur's gonna repeat the question and then answer it. Arthur, you back in on Zoom?
Yes, ma'am. I'm back in. You can hear me?
Yes.
Okay. So the gentleman asked about the Rockefellers. So what the Rockefellers did is set a generational banking trust in order. The member of the family set up the initial, and then he taught all of the children, this is what we're going to do. It's much better to loan money to countries than it is to loan money to people. So what we're going to do is we're going to start centralized banking so we can loan money to countries and industry. And I'm going to start it here, and we're going to build it. And now each one of the kids' responsibility is to go to a different country and set up that banking structure there. So now, no matter where we are, no matter where that money comes from, you have multiple countries in the pocket. We're in the pocket of multiple countries. See, America is in the pocket. England is in the pocket. Germany is in the pocket. Italy is in the pocket. And I believe it was Lord Rothschild that made the statement, I don't care who run your country if I manage your money. So, yeah. Oh, it was amazing because it's generational. We got to remember that most of the wealth that we see being created by these internet millionaires, these are flukes. This is not how wealth is generally created. It is generally created under generational dynamic of bringing in much more over the course of the family than the family is expending. Everything they bring in becomes family ownership, family property. And when you set it up that way, it makes it very hard or difficult for your son gets some girl pregnant, and now she can't get anything. As a matter of fact, it was a case here settled in Florida very, very recently, where the young woman had a child from a guy who was a trust fund baby. So he lived really nice and drove a really nice car. But once they actually did the forensic accounting to see how much money he had, this guy was broke. People at McDonald's made more than him, but he did not need the money. Now, this is the beautiful part, because once the child was proven to be his, he fell right under the trust. And all of those things that you have to go to child support court for, that was not necessary. She literally got a package once a month on the front door that covered all of the expenses and things that they needed for that child because it came directly through the trust. That's how they set it up. And under the bylaws, it covers those children. Now, by the same token, it also protects. So say a trustee or a beneficiary and their spouse get divorced, there's no community property. You ain't getting nothing. You're going to leave here with what you came with. Why? Because they don't own the house. The trust do. Y'all see how this works? It sets protections in place for long term. It's cutting the idiot stuff out. It's making it idiot proof. We going to be wealthy because you ain't going to be able to mess it up. That's what it do.
Just tell people how real estate developers get bigger and why they never liable for any defaults of the property.
On it
happen because they pretty much purchase everything through the trust.
Yes, sir.
So real quick, just to touch on what you said about Trump. So if you follow Kiyosaki kind of like tells all the secrets.
Don't he?
Yeah, he drops everything. He gives it up. So what Trump did, Trump is a W-2 employee, but like you said, if he need anything, he had access to the capital, obviously. But being a W-2 employee, he get paid, probably made $10,000, obviously managing billions of dollars, but he probably got paid $10,000 just to get some of the benefits, like health benefits and all the rest of the stuff they pay a full-time employee. But yeah, that's pretty unique what they do. But to simplify it, I think trusts are best when you just utilize it the correct way, not if you don't have the ability to do the advanced stuff. It's just best you get your ducks in a row, because generally if you accumulate assets and your children start making bad decisions, at least you know your grandchildren will be able to benefit from the good decisions you made. That's how.
Yes. And that's what it's for. That's literally what it's for. Because even if your kids make some really piss poor financial decisions, that trust got a net underneath them. So they can only fall so far. We see that in our society from trustees and beneficiaries. We see it all the time. We don't understand it because they don't give up all of the, they don't tell you all of the dirty little secrets that are out there. But this is how these people get away with these things. That's how they can, like you said, complete negation of any civil liability under land management because the trust owns it. When you operate that way, you literally operating for a generational dynamic. You're looking at the long-term goals, not for you, not for your kids, not for your grandkids, but the children who will only know you from a picture, those are the ones you're taking care of. And that's why they do it.
Real quick, and a reason why a lot of people stay away from trust is because the cost of them, right? And the thing is that generally your upfront costs will be a little hefty, but it depends on what you're trying to do. But generally, what a lot of people are being told is to get wills, right?
Okay, check this out.
And when you get a will,
that's a bad.
You're going to deal with some other things. But I know, Arthur, you can touch on that as well.
Okay, the only way, there is only one way to avoid probate. That is one way, the trust. Everything else has to go into probate, and it is by law. Everything. If you don't have a will on it, then it's going to the state, period. If you do have a will on it, then it's going to them with some processes. But anyway, it's going to them. But because the trust is a living document, it's alive from the moment it gets funded. It doesn't die. The grantor or the beneficiary or the trustee does, which means there is no probate. There is no inheritance taxes. There ain't even no damn estate taxes because it's already living. It don't ever go anywhere. So consider, I'm gonna tell y'all, probate was designed by some sneaky lawyer dude. Somebody snuck that in there in order to steal from people because that's really the only purpose for it. And I know Sister touched on it earlier, Lady G touched on it earlier. They do not have to prove those debts. They don't. It is not the court's responsibility. If that person comes in with the proper paperwork to the county clerk office and they file that claim, they're going to accept it. That's just what it is. They're going to accept it. So if you want to keep your stuff properly, you need a trust. I'm just going to tell you, you need a trust about as much as you need insurance. They right there together. These are part of how the people who have. And this is how they keep generationally. And remember, the important thing is to keep what you kill. We make money. Everybody make money. Hell, a drug dealer make money. He don't get to keep none. Okay, the cost. I want to cover one more thing. Wait, I want to cover something right quick. The cost of starting a trust. A trust does not have to be expensive to start. I want to say that again. The trust does not have to be expensive to start. For the people who are on Clubhouse, if y'all see my picture up at the top on my profile picture, it has one silver troy ounce coin on that picture. You can fund your trust with that. You can literally start your trust with a silver coin, with a gold coin. You just need to have something in it that holds value that will initially bring life to the trust. You can add to it as you go along. That's the dynamic. It's kind of like insurance. It'll be more expensive for you to start your trust once you have $100 million in assets than it is for you to start it when you don't have a lot of assets, because then you negate the need for having an actuary. You negate the need for having an actuary to actually put a signature or proof what a thing is worth, because you can actually purchase it and know what the cost and the price and the value of that thing is when you get it and add it right onto the trust. Now, I will say this, in order to add something to the trust, it has to be owned, free, and clear. You cannot have a third-party creditor. You cannot have a creditor or a debtor. There can't be a mortgage on it. There can't be any holes on it for any third party because you're taking it out of the system.
For that, man. And I definitely want to hear much more of it. Before I answer this question, I just want to say, from the investment side of things, I'm going to reach out to you all because I've got a lot of clients I think would benefit from. So I'll just leave that there first. Secondly,
Look at God.
I know that in the professional, we speak professional lingo that the audience may not necessarily pick up on all of it. But you said something a little while ago that really piqued my interest. So you said that tradable instruments can be owned by the trust.
Yes, sir.
People understand that. That means that your investments that you own can be
Yes.
ownership into the trust. I just want y'all to. I just wanted you to say, because this is your
opinion. Yes. No, you're right.
It's some powerful information there. I just want to make sure that they
yes, sir.
Process it.
Yes, you are 100% correct. Your stocks, any bonds, any account, your trust can own them. Your trust is like you, but not you. It's a fictitious person that you created. But because there's no real person, there's no real civil liability. How about that? Check this out. This is one for you to stew on a little bit. Have you ever seen a trust owner or the direct trustees go to jail for anything? Exactly. Because all of the civil liability has been mitigated. All of the criminal liability has been mitigated. That's why nobody went to jail under Johnson and Johnson with that baby powder, guys. All of the liability is mitigated.
I give you one in more recent, and then I'll give you one in more recent history, right? Look at a few years back. I can't remember his name exactly. It was an NFL player, Hispanic guy. And he got
Aaron Hernandez. Yes, sir.
And he was convicted. He transferred all of his assets over to his daughter's trust.
Yes, sir. And she still gets everything. He still gets everything.
He couldn't get it down from him.
Not one.
Protested, but those assets were now owned by the trust, and there was nothing that they could do about it.
And check this out. And she still got his NFL benefits too in the trust. In the trust.
Say that real quick. Just for disclaimer reason.
Yeah. Okay. I want to put this out there. When you dealing in these type of dynamics, it is not to do crime. As a matter of fact, you are using the law. That's what you're supposed to be doing anyway. You using the law. This is you actually going by what the law says. So it's not to go commit crimes, but it's good to know that the law can be your security blanket if you set up right. And with that, I'm gonna hand it over because I know we got some more speakers to get here, and I won't keep everybody all night.
Okay, so Arthur did just a great job, but I need Arthur to come back because we have a question on Zoom to Arthur. How do you fund a trust, and does it require a social security number or EIN?
Oh, okay, I got a little feedback on that one. Could you run back over the question for me one more time?
So the question is, how do you fund a trust or find F-I-N-D? How do you find a trust? And does it require a social security?
No, that is actually fund. That's how do you fund.
Oh,
okay.
It is fun. Thank you, Nancy.
Okay. You do not necessarily need a social security number to set up or fund your trust. You can fund your trust with anything that has asset value, anything that can appreciate in value, anything. I don't care what it is. I mean, like, for real, dude, you can fund your trust to set up with a MacBook. It's got value. Now, you won't own that MacBook anymore, but you still will have access and usage of that MacBook. And if you put in the bylaws that MacBook can be sold and or traded for the benefit of the trust, then you can do that too. It's just putting your things in order to there so that there is a set of operating rules by which you access the assets, if that makes any sense. But yeah, it's not difficult to fund one, and they got templates and grandmas. But before anybody jumps out there starting one, I would advise you to sit down with somebody and talk about it, because it's a very involved document. It could literally be 100 pages. How far into the future are you planning?
I like this understanding where you're at and working through the process. It's not a fast process, guys. is definitely a unique one where you could kind of like maintain the assets. And like he said, like generally, if so, what I've seen, people that go through probate, you usually lose what somebody else built up. So probate is never a good thing because other people that don't deserve stuff usually get involved. But the moral of the story is that it's a long process, but it's a useful process. It's just like life. It's just about doing the right things at the right time and getting your stuff in order. But Arthur, that was great, man. I don't even get on Clubhouse, but I heard it was going down, and this is what it's about, right?
Yes, sir. Okay. I think there was a second part to that. If your trust needs an EIN, okay, that's going to depend on whether you have a private or a public trust. Is your trust going to be private and then it owns public companies, or is your trust going to be public? The public trust, that's when you got to register all down the line, Secretary of State, county, city. You got to make sure everything's turned on to all these people, so all these people know that you have this active trust going. And you can have a private trust where it's just registered with the Secretary of State, and then you can have that private trust own a front-facing public company. So if we look at the Kraft family, they've got a trust on top that it owns Kraft Industries, which owns all kind of other stuff. If that makes any sense. Now, what you would do if you were going to do EIN, you do a private trust with a front-facing company, and that INC or that S corp that you have, it would have an EIN. If that makes any sense. Did that answer your question?
Yes, it did. It's just one other question. I have a trust, but the only thing I had in it was a couple of properties, but then they're sold. But then I'm like, well, how do you put money other than putting a property's name in the putting the property, the name of the trust, putting the property in the name of the trust? How do you actually? I still don't understand how do you actually put the money in there without a EIN or a social security number, or are you saying you required 100 pages? Because I'm looking at my trust and it's only about 5 pages.
No, you don't have to have 100 pages. It just depends on how far down the road you're projecting. But how you get the money into the trust or the assets into the trust is going to be a transfer document. And it'll be filed. It's a part of the trust when you register it. You're going to transfer those things from your ownership to the ownership of the trust. And it's literally you filling out the document, putting a wet signature on it and having it notarized to transfer that thing. And then the title of that thing. So if it's a vehicle and you transfer it to the trust and it gets registered, now you have to take that vehicle and take the registration out of your name and put the registration into the trust name. So whatever properties that have your capital letter name on, that capital name for you has to come off and the trust name has to go on it. So if it's a property, then it'd be a transfer, and then you would take that notarized copy to the registrar of deeds, and then they will do the update of that property and have the names changed. You feel me?
Yeah, Scott, where are you located?
I'm in Florida.
Okay. Well, I'll reach out to you.
Okay.
Sure, no problem.
We have on Clubhouse, someone has a follow-up question for Arthur. Go ahead.
Okay, so just piggybacking on that statement. For example, if you have a car that you want to put into the trust, will it make it more challenging for the car to be insured through the insurance company now that the trust owns it?
The trust can have policies. The trust can do anything it wants to. Can't the trust get policies from you, lady? Lady G. Can't the executive over a trust come to you and go, hey, I need policies to cover A, B, C, and D.
That's right.
And the trust will be the name on them policies.
That's right.
Yes, ma'am.
That's right.
Okay, perfect. Thank you.
No problem.
All right, this is Dwayne over here on Clubhouse. I also got a little bit to contribute based on the earlier conversation. Lady G had mentioned, I know you touched on 401k. A lot of products, they're not explained to us. We're just offered products with no explanation on how to use them functionally. So for 401ks, the attractive part about a 401k is the match. All right. So
talk a little louder, Dwayne, so they can hear you on Zoom.
Any percentage, let's say they're matching 3%.
Dwayne, talk a little louder so they can hear you on Zoom.
Okay, is it any better?
Go ahead. Mm-hmm.
Is it better?
Yes.
Okay, perfect, perfect. So yeah, what I was saying about the 401ks is that 401ks, you have to know where the benefits are for these products because they don't explain how the products work. They just offer you products. So oftentimes people don't know how to maximize how much they can get out of products. So the most attractive thing in a 401k is the match, right? So most companies offer a match, not all, but most companies, they offer a match. Maybe that might be 3%, 2%, 5%, it can vary company to company. But what that match represents is free money. Okay, free money. So let's say they're matching you at 3% of your paycheck, and I don't know, let's say that equates to $50. Every time you put $50 in, the company will put $50 into your savings account. That's money you didn't have to work for. All right, so take advantage of all the free money and don't leave it on the table. I think that's something that's not explained to us. Like, don't put in 2% if they offering 3% and leave the 1% on the table. That's free money you could got put into your savings. So, I just wanted to throw that in there so that people don't just throw the whole thing away like, hey, 401ks are no good. They serve a purpose in your overall financial plan, but you just have to know how to best utilize it.
Keep a third for taxes. Keep a third for taxes.
Absolutely, absolutely. See, the thing about 401ks is the money, when it goes in there before taxes are taken out, right? So we got to understand Uncle Sam is always going to get his cut, right? Unless we talking about a Roth IRA, that's something different. But even then, Uncle Sam got his cut. But with 401ks, it goes in before taxes are taken out. So you have more money in the market to compound and grow. But then on the back end, when you go to take that money out at retirement, then yeah, you're going to have to pay taxes on all of that. Whereas with the Roth, what you put in is assumed to be money that was already taxed by your employer, before it got sent to your bank account. That's money that was already taxed. So whatever you put into the Roth, up until $6,000 a year, if you're under the age of 57,000, if you're over the age of 50, whatever that money grows to, you don't pay taxes on any of that as long as you wait till 59 and a half years old and you've had the account for 5 years. So, there's different tools.
I know that's right.
Yeah, there's different tools to maximize the growth of your wealth. You just gotta sit with an advisor, and there's a lot of misconceptions about advisors too. People think advisors are all expensive. You know what I mean? There are some advisors that don't charge a consultation fee. You know what I mean? And there's some that do. You gotta search around, find one that's right for you. You know what I mean? And it is worth it. I think the problem is that we oftentimes don't want to spend what we think is a lot of money up front, not realizing that that's an investment in a lifetime of generations of wealth going forward. So I just want to leave that there.
I have a comment. If you think
knowledge is expensive, try being ignorant.
Woo-hoo. Yes, Arthur. Preach.
And a real quick, one thing I've seen too about people that have 401ks, the individuals who put them in place, they never ask them any questions because you feel like you're burdening somebody. Understand this: when you got a 401k through work, they are getting something called management fees, right? So the management fees are going to get taken out if your portfolio is up or if your portfolio is down. So the most thing you can do and the best thing you can do for yourself is be proactive, because what they would do is put something in place and never talk to you again. But that 3%, whatever they charging, because they're going to get their money regardless. And the more of the story is that you got to ask questions. And if somebody is not willing to educate you and you're doing business with them, you got to make a decision if that's the right person to do business with. And listen, understand, when you start dealing with your retirement, you got to be diligent because it's your retirement. So the more of the story, ask a lot of questions where you can make sure that you understand. And if you need to confirm it, then you talk to somebody that you feel like is knowledgeable. But also, if you have the means and the discretionary to pay for outside service to make sure that you're getting a bang for your buck, because everything in life isn't cheap. And sometimes dealing with people who kind of like have significant information, they understand their worth, and that's what they're going to charge. And if you're trying to go to a next level, understand allocating funds the correct way with the correct people and putting yourself in a situation is better than being like, well, I don't want to do that. You got to try some things sometimes, and everything is an investment if you're doing it for the right reasons.
Absolutely, John. Absolutely. I just listen, you hit it spot on. And on the business owner side of things, understand that there's always a benefit while people do things. So there's a benefit for the employee signing up for the 401k. You know, the biggest benefit being the free money if they're offering a match. But for the employer, with a lot of people, especially like smaller businesses that might not have been profit, when you set up a retirement plan, let's say like a 401k, and you offer that match, most companies, small businesses think, oh, that's money I have to pay out. But because that money is pre-tax monies, then at the end of the tax year, and I see a tax person in here, at the end of the tax year, they can write those contributions off against the taxes that they had to pay, their tax liability, and now they pay less in taxes. Right? So and now they have higher employee retention, because why do employees stay at a job? Mostly because of the benefits, right? So if there's a win-win. You just got to understand where the win is and how to take advantage of it.
Are we able to ask questions on Zoom?
Yeah, so I was just coming that way. So my guys on Clubhouse, let's give an opportunity for the people on Zoom to ask a question. I see many questions in the chat, but Yvette, come on forth with your question, sweetie.
Thank you so much. Thank you, Lady G. Arthur, thank you. Wow, that's what I can say. So now you have this newfound information, right? And you have an established life already. You got cars, you got properties, you have all this stuff. You want to set up a trust. Do you have to advise all these people that you're doing this trust, or can you just do it? So like you own a home and now you put it in a trust, and then the bank or whoever you're paying the mortgage to, they see the transfer of the home from.
You can't do that. You
Okay.
cannot, if it has to be owned free and clear. It's got to be free and clear. Otherwise, they won't allow you to transfer it. But if you've already gotten these things, and you already got your bill of sales, your deeds and such, then the transfer process is easy. It is really easy. It's literally putting that property or that thing down on the acknowledgement and transfer to the trust, because it's literally a transfer to the trust. You're going to put whatever it is in there. You're going to provide the bill of sale or the ownership documents to go with it, and you're going to sign that transfer for that document in front of a notary. They're going to notarize it, and then you'll have it recorded. Once you have that recorded with the Secretary of State or whoever else, then it's only informing whoever is. So like, say if it's a property, then it'll be the registrar of deeds. You take it down and give it to the registrar of deeds. They'll go into the computer and update the ownership of that property to the trust, and then you'll get a new deed for that property with the trust as the owner. You feel me? And it'll work that way with each individual type of property that you transfer. You just have to make sure that the registrations or any documentation that follows that property has the trust name instead of yours.
The moral of the story is that anything that you want to transfer into your trust cannot have a debt connected to it, meaning that a loan or any outstanding loans that's connected to that asset, it have to be free and clear. It have to have no debt outside of something. It can't have no debt. The moral of the story is that anything that you want to transfer into a trust have to be debt free. So when you see like Kushner and them buying buildings in Manhattan, they buy them in cash. So the reason why they buy it in cash is to roll it into a trust. Then outside of that, what they would do, if I'm not out there, correct me if I'm wrong, what they would do is refi out of that loan and then pick up the line of credit inside of that trust and start purchasing more. So it's
a couple of ways. It's a couple of ways. You could do it that way, or you could do a direct trust purchase where the trust actually purchases the thing. Oh, it's different when you go to a dealer or you go to a company to purchase a house, and it's not you, but you're acting as a beneficiary trustee to acquire a property, and it changes.
All right.
Thank you.
All right. So thank you, Yvette, for asking that question. We have another question in the chat on Zoom. Can't you open a checking account for a trust?
Yes, ma'am. You can, anything that a person can do, that trust can do.
Awesome, awesome, awesome. All right. I love how this is going. Now, before I bring on the next speaker, I already know how this is going to go because over in Clubhouse, we are used to spending hours talking about this. So I want to get through the next two speakers so that if we want to hang out on Clubhouse for a long time and those that want to hang with us on Zoom have the opportunity to, but those that need to go, we're not keeping them. So I don't want them to miss anything. So let's hold off now and hear from the next two speakers, which is I'm going to ask Miss Shantae Singleton, who is a licensed financial professional, to come in again and give her perspective on the importance of life insurance, and what her thoughts are. So Shantae, come on and greet the people.
Hello, everyone. How you doing? My name is Shantae, and as Lady G said, I'm a financial specialist. I'm here in Houston, and my big thing with life insurance is that because you're young,
I don't know if it's just
we can hear you.
okay. It might
Okay,
be Paul.
Okay, I heard someone said they couldn't hear me.
Yeah, you're good to go. You're good to go.
Okay.
Keep going. You're good to go.
But yes, as I was saying, I have a 10 and a 15-year-old that I have life insurance. GoFundMe. And it hurts me to my heart that, she did not have life insurance, but you never know what's going to happen to your kids at those ages. You pray that you never have to use it, but to have it there is so beneficial because you're already going to be grieving the loss of your child. You don't want to have to also worry about where that money is going to come from to have to bury your child. So have those life insurance policies as a backup. Like I say, you pray that you never have to use them, but they will be there, building cash value, adding wealth to your financial situations. It's so many different opportunities that we neglect when it comes to life insurance. These people are building wealth using life insurance. If you have a home, people get life insurance to help repair or buy roofs for their home to add extra rooms. There's living benefits that you can use. Life insurance is not just for when you die. You can use those same benefits while you're living to pay off mortgages, to pay off investments that you have. They're used for several different things. And people always say, oh, I don't have the funds for these. The same amount that you're spending on hairstyles, nails, purses, jewelry, Jordans, those are life insurance policy payments. And sometimes it's even cheaper than that. And that's something that you and your family can have for generations if you set it up right. Everything is about how you set it up, but it can be used for those purposes. Like Lady G said, you don't necessarily want to get a term, but if, at least term is something and it covers you until you're able to afford the permanent life policies. But as she said, with term, it's only covered for a certain amount of time. If you get a 30-year term policy, when those 30 years are up, if you're in good health, you can get another policy. But now that term policy is going to be even higher. And if you're sick, it's going to be even higher compared to that. So if you're young and healthy, get a life insurance policy now. There's no need to wait. Because, for instance, another situation, I had a partner that they had just did a policy on a young 21-year-old male, and he was healthy. And the mother called my partner crying in tears. Her son had just got a policy a week ago, and unfortunately he had a tragic accident and he passed. And the mother told him that when her son came home to her, letting him know that he had a life insurance policy, she told him to go cancel it. She told him that he was too young, and that he did not need that policy. And the lady was crying, and she was just thankful that this one time her son didn't listen to her, because if he would have went and canceled that policy, that incident that happened, the mom would have been crying, looking for benefits, trying to bury his son. But now it was a bittersweet moment, because she was mourning the loss of her son, but she was thanking the agent, because now she was able to have funds to bury him. Because if he would not have gotten that policy, she'd have been mourning her son and also trying to figure out ways to bury her son. No parent ever wants to go through that. Me, myself, being the daughter, I'm an only child. I like to tell stories, because stories put things in perspective. So for myself, being the only child, I got out the military 6 years ago. And my last couple of months, my father was sick. I'm the only child on my mom and dad's side. They divorced when I was a kid, but neither, never remarried. So my father got sick, everything fell on me. And when he died, he didn't have a life insurance policy. So here I am by myself trying to figure out what I'm going to do for my dad. How am I going to bury him? I couldn't really mourn the way I wanted to and take care of everything, because now I'm trying to figure out, am I going to cremate him? Am I going to have the money to find a burial plot? Am I going to have the money for a casket? All these things running through my mind while I'm trying to grieve. That is not an easy task for anyone. So that's one of the reasons that made me want to get into the life insurance situation, because I knew how I felt, and I didn't want that to fall on anyone else's shoulders. Because being a child, having to bury your parent is a hard task yourself, and then to know that there was nothing left behind for me to take care of the final expenses. I never wanted my kids to feel that same situation. So when that happened, I got life insurance on my kids, because life insurance on myself, because I didn't have that. And I thought about it. I was like, I never want my kids to have to worry about me being gone and also having to worry about how they're going to bury me, because no child should have to worry about that. Because me as a parent, even once I'm gone, I still want to be able to take care of my kids. And life insurance, it does that. Because like Arthur and Lady G said, you don't have to worry about probate when you have life insurance. If I'm gone, my life insurance is going to take care of my home, if there's anything left to take care of for that, and it's going to benefit my kids for years to come. But if I do not have that, whatever I have, if I don't get a trust, which I plan on getting from what Mr. Arthur said, getting me a trust, but if I don't, all those things are going to go into probate, and then my kids are going to have nothing. But the life insurance, they can't touch. So if you do not have life insurance on yourself, get it. If you don't want it for yourself, get it for your family, get it for your kids. Even if you don't have kids, someone has to take care of your final expenses when you're gone. Someone is going to have to bury you. People think, oh, I'm not married, I don't have kids. That does not mean you don't need life insurance. As you said, there's living benefits, and also once you're gone, it's not the point of if you die, is when you die. Because unfortunately, one thing about life, everyone dies. Not everyone lives, but everyone dies. No one wants to talk about that, But you never know the day, you never know the time. It could be today, it can be tomorrow. So don't put off, oh, I'm 21, I'll wait till I'm 50. Not everybody makes it there. So if you don't have life insurance, you need to get that today. If you don't have it on your kids, get that today. Like Lady G said, check your parents and your grandparents' policy. My grandmother, she told me, oh, I got life insurance, check their policy. It was lapsed. I had to get her some more life insurance. And she was sick. We almost lost her. So if we would have lost her, we thought she was taken care of, and she wasn't. She had a term policy. And a lot of older people, they don't know anything about that. And some younger folks don't even. All they know is I got a policy. Check the policies. If you don't understand how to read it, you got people on here, you got Lady G, you got myself. Contact a life insurance expert. That even if you just want to ask questions, we're here to answer those questions, to check those policies. Because the last thing you want, like she said, oh, I'm good to go, got life insurance, and then once you're gone, people are scrambling, looking crazy, trying to figure out what's going on. Take care of your family. Don't just take care of them while you're here. Take care of them while you're gone too, because that's the last thing that they're going to remember. And I'm Shantae, and I'm done.
Oh, I felt
Let me
that.
touch on that too, real quick. Something about life insurance, right? Why you want a physical copy at this point too, because there's no database which an agent can go to and be like, all right, well, he got a policy through Prudential, or he got a policy through New York Life. So the thing is that when you get coverage, whoever the beneficiary is, you want to have a conversation with them and let them know what you have in place. Because if an individual pass away and no one knows who's the insurance company will not just pay out randomly, because it's not like they get the vital statistics from states and be like, oh, all right, Adam got this policy. Let's contact his beneficiary. It doesn't work like that. But the moral of the story as well, the thing is that people are always going to learn a hard lesson. And sometimes wisdom, when you see people go through hard lessons, you got to ask yourself, are you prepared to go through that same thing? Because if you make the same decision as they made, you're going to go through the same situation. That's just my piece.
That was good, John. That was very good. Thank you for adding that. That was good. Shantae, everything you said, that thing is bubbling up, got me all, yeah, that thing hit. We have to realize that I say it all the time in my rooms. Love is an action word. Don't tell me you love me. And then when you leave here, I'm grieving for you and now having to worry about how to bury you. How is that love? Love is having your stuff in order, that when I do lose you and I'm heartbroken, that I'm able to grieve a little easier because I can say they had a life insurance policy. They didn't leave me to struggle and wonder how I'm going to do this or to put up a GoFundMe. They loved me enough. You loved your kids enough to leave something behind. I just had a 30-something-year-old funeral. He left behind a 2-year-old. Whoever's going to be taking care of that child, you don't know if they're living paycheck to paycheck. That's an extra mouth now to be fed, to put through school, get supplies, uniforms. But if you had had a policy, that funding could have helped raise your child that you're leaving behind. Nobody thinks they're going to leave here in their 30s. I often say, listen, parents are outliving their children now. I mean, left and right. And love is an action word. If your parents are senior citizens and they are collecting Social Security and pension, they're probably barely making it with this inflation. So imagine losing you, their child, being heartbroken, their hearts are in pieces, and then you didn't have a policy. So now they're stressing on how they're going to pay for your funeral. Now, which can cost like $15,000, $20,000. All right, you want to get cremated, it might be a little cheaper, but it ain't gonna be that much cheaper, because do you at least want to be able to, they want to at least have a service. They don't want to just ship you to the crematory without being able to say goodbye. I just had a client that tears, tears, because he wished he had put a policy on his child, 20 something years old. She's gone, car accident. And in tears in his eyes, he said, I wish I had gotten a policy on my child. I wish I did, because I didn't, I had to burn her because I couldn't afford to bury her. Do you know how heartbreaking it was to hear something like that from a parent? But we need to do better. Get the policies for these children. Get the policies for yourself. There is someone, was in one of these rooms. She gave us a great testimony. It wasn't that great. Well, it was a testimony. Her husband had cancer. It's a precondition. He couldn't get life insurance. He passed away. She had nothing. She had no money to pay for his services, but she had a life insurance policy. She paid for her husband's funeral from her life insurance policy, withdrawing the money from there to pay. That's a living benefit, guys. That's a living benefit. He couldn't get a policy, but she had one and was able to use it to bury him. That is a living benefit. I was just out a few weeks ago, and those had been in my rooms. I've been talking about this and talking about this. I had my earphones in my ear, blasting my music, going about. I just wanted a nice walk, shut out the world. And I'm walking, 20 minutes into my walk, I jump because I heard this boom. A car had came and rammed into a parked car, took that parked car into another parked car, brought it onto the sidewalk. Missed me. I had just walked past that car. Had I been walking a little bit slower, may have been distracted, dropped something, went to pick it up, there would have been another story. But at least I can say, because I know that I don't know the day nor the hour, but my family won't have to put up a GoFundMe. So we need to take responsibilities on these things. I want to bring forth Irma Castillo right now. She is a nurse, and I want her to just give you her perspective being in the health field and having to take care of people that may not make it out the hospital and what their families have to go through. Irma, greet us, please.
Hey, hello everybody, and Lady G, Arthur, it's nice having you here and being here with you guys, sharing the stage. My name is Irma. I am a nurse, and I've seen situations where is detrimental. I mean, just Lady G just said it, even living benefits, that right there. I've seen a lot of patients come through either the hospital or nursing homes that I've been or worked at before. They have limited income. And oh my gosh, it's sad to see when these patients, as they get older, they get forgotten, either at the nursing home or wherever it is that they may be. And nobody comes up to visit them or, not even to take care of them. They have to be in this place where they feel that they're just there, and a living benefit would probably save you from that situation where you don't have to be in a place like that. If you have a terminal illness, you can just pick, you want to stay at home, you want to, with a family member or whatever the case may be, you want to stay home. You don't want to go to a living facility, or you don't want to go from, maybe a 2,000 square feet home into a 300 or even 100 square feet room that you have to share with, not just you, but other individuals. And the care, I'm not saying that, but it is just something that you want to look into. If you have any elders, even for yourself, it's something that you want to plan ahead of time and, look into the living benefits. That is really, really useful. Also, I've seen cases where family is, instead of mourning, they're fighting, they're shouting, they're taking it out on each other because either they don't have a way of paying, they're stressed, for a funeral, and they're just blaming each other, or it's just, it can get a little bit chaotic. I've seen also cases where that's why it's very important to have a will, or something in writing in place. I've seen actually family members blocking other family members where, me working in a facility, I couldn't give any information to, the other sibling, because there was a power of attorney. There's only certain communication that needed to go towards that power of attorney first, and we weren't allowed to disclose any other information. We couldn't even confirm the death of the patient. So it's just, it can be a hot mess. If you don't plan, if you don't leave anything in place, unfortunately we live in a place, in a where, siblings might not, for whatever reason, they're trying to like fight each other, and then they use, either the mom, the parent, or, no, you don't help her, I do, so you have no say, and like XYZ. So it's just a lot. So I've seen, quite a bit, and I love this room. Lady G, I really enjoyed your information, and Arthur, you were very informative today. So I can say that I learned a lot with trust. So yeah, I mean, I'm just also here to learn more and just say a little bit from my perspective from a nurse. And that's all I have to say. So I yield my mic.
Thank you so much for that, Irma. That was great. Sometimes people don't understand um, what nurses go through and what they see hands on. And when you have nurses that have a heart for the people, they can feel the patient's pain, whether it's that they're not getting visitors from family, whether they're just hurting. So, I mean, it's really good to hear from a nursing perspective. Um, I know someone put in the back chat, so let me reiterate illnesses that can be covered by having life insurance is if you have a heart attack. These are not terminal illnesses. It's if you have a heart attack, if you have a stroke, if you have cancer, if you have Parkinson, if you have blindness, if you have HIV, if you have AIDS or paralysis. These are critical illnesses. And this would be covered under the critical illness rider to anyone that needed a payout, which can be up to 90% of the death benefit. um, I want to reiterate that just not reiterate, but say, just like you take your car to get a checkup at the auto for oil change, same way you go to get a health exam for a health checkup. If you're in this room and you actually have life insurance, get a checkup on it. It may have been good for what you needed it for then, and it's still good as far as to bury you. But you may need a bigger policy, maybe if you bought a house and want to be able to pay off the house when you retire, or you just have more things that you want to do. So that Gerber policy that your mama got for you when you was a baby may not be working for you right now, if you're trying to plan for retirement. So do a checkup on your policies, and you can, those that are in Clubhouse, you know the deal. You can hit me in the back channel. I'll send you the link to set up a one-on-one with me, and we can do the checkup on your policy. If you do not have a policy, those on Clubhouse can go to the back channel, hit me up, and I will send you the link for a one-on-one. If you are on Zoom, you can hit me in the chat box. I want you to understand and make a decision to just do better. I want you to get into your head that we are not going to no longer be in the place to have to borrow from Peter to pay Paul to bury you. We're going to do better. We're going to leave a legacy for our family, and we're not going to leave them in a place that they have to put up GoFundMe's. So take action with what the information that you received today, and do something about it. Don't just leave with it. Don't do the whole I got to think about it, because while you're thinking about it, God forbid something happens tomorrow, you're not covered. If you get a policy today and something happens tomorrow, you are covered. You hadn't had it for years, but you're covered immediately, even while it's going through the underwriting process. If you make that first month payment with it, if you don't and you just wait for the approval process, then you're just not covered. You're out there still naked until then. So I want you to think about that. I'm going to leave on Zoom my contact info if you want to reach out to me. Go ahead, Arthur.
I have a trust masterclass that I have already done. And what I'm going to do is we're going to make it available to everybody who's in here for $99.
Awesome.
Lady G is the code. Lady G is the code. I'll make sure I post it. I'll make sure we put it in the room here, and I'll have my wife put it into the messenger here on the Zoom, so everybody can have access to it.
Awesome, Arthur. That's great. I'm writing it in the chat in Zoom now, so they have it there. Okay. So that is absolutely awesome. Thank you so much for that.
Definitely.
So this is what I want to do. And I just feel led to do it this way because I said I know how this is going to go with Clubhouse concern. So if anyone has any questions on Zoom, you can continue to write it in the chat, and you can come forth with your questions. We're going to also leave it open to Clubhouse to come with their questions. But if there is anyone that needs to leave on Zoom, you are more than welcome to. But let me do this. I want to pray the blessing of the Lord be upon you first before you leave out of here. And if you want to stick with us, because I think this is going to be a long one. So I just want to pray the blessings of the Lord upon you. Thank you for coming into the room. May he keep you from all dangers seen and unseen. May he keep you from all sickness and disease. And when we meet again, may you be able to say that this was your best week yet, because the best is yet to come. If you need a policy, send me a private chat message and we can get that. And I will add my contact info to those on Zoom. Those on Clubhouse, you know how to reach me in the back channel. So we're going to continue this conversation. I just don't want to feel like I held anyone on longer than we needed to go. So thank you guys that are going to stick in here. All right. So questions on Clubhouse. Who has a question? There's many people on the stage.
Hi, this is Diamond. I have a question.
Yes, Diamond.
I wanted to know, I know that Arthur said that he's doing the mastery class for $99. Is there a way for us to have a trust set up? Can you do that? Or do you offer that service?
Yes, ma'am. Most definitely.
Okay. So how do I reach out to you for that?
I got a trust consult link, and it's on my IG.
Okay.
On my link tree.
Perfect. Thank you.
You're very welcome.
Okay. So let's start with Brianna, who is on stage. Brianna, do you have a question for the room?
Hello, good evening, everyone. Thank you so much for just all the information that was shared. I am a licensed agent in the state of North Carolina and Virginia, and I can definitely echo what you said here, especially about the living benefits and the cash value portion of the IUL. I just spoke at a college today and provided this information to a graduating class of cosmetology students just to have them be aware, because if you don't know, you don't know. And this having access to this information is so key, especially for our community. So I just want to commend you all for what you're doing, and especially you as well, author, with all the information that you shared regarding trust. When I try to have this conversation with individuals, and I'm like, okay, you're a high net worth individual, you need a trust. Like, you own a lot, and just trying to get people to understand because they think the will is everything that they need and it's going to keep them out of probate. I just think that you guys should continue to hold this platform because it's definitely valuable. So thank you so much.
Oh, Sister Brianna, this is what you do. When you have those high net worth clients and you show them in the law where it says that will requires probate. That'll change, that turn their head.
Okay. I will use that. Absolutely.
Awesome. That's great, Brianna. Awesome. Arthur, we have in the Zoom.
Use a link or whatever, you can post it however, because I don't know how you want to post it on in the clubhouse room. I don't know how we want to do it there, but if y'all in clubhouse, just back channel me.
Okay, but these are people on Zoom, so somehow go and write it in the Zoom chat.
The messenger. Yeah, she's gonna type it into the messenger in the chat in the Zoom.
Awesome.
Hey, can I jump in?
Okay, she's gonna direct message you, Lady G.
Awesome.
I'm gonna jump in and say something in regards to agents, right? And anybody that's been in this capacity for a while. You have to understand, just because you tell somebody to do something, that don't mean they're gonna do it. What you have to do, you have to create credibility in what you're saying. Sometimes the thing is that when you come off with people not being like, how could I say this? Like, it's like being articulate and putting them in a situation of comfort. Sometimes, a lot of times, if you guys just getting in this capacity as a professional, financial service professional, you guys got to build credibility, right? And sometimes people don't do things because they just don't trust you, because trust got to be there. And the thing is that if they don't trust you, it don't matter if you tell them the light is green and the light is green, they still going to think it's red. So the only thing I can say is that you got to build up credibility as well in this business, because you can have anything in life to give somebody, and if it's the best thing for them, if they don't trust you, they're not going to take it. So the only thing I can say, if you're in situations when you're getting a lot of individuals who don't have coverage, those are the toughest people to work with because they don't have anything to compare it to. And I think sometimes as being a new agent, guys look for the lowest hanging fruit. And sometimes you want to deal with some people that can compare stuff. The best thing to do is have people be able to compare what you do to know the value that you're bringing. And a lot of us get in situations when they don't have anything to compare it to. So like when you say about a will and a trust, because they stuck on price. And thing is that if you can't get them off that price, you have to move on and let them be in a situation when you can utilize them as an example. That's the moral story. So I just want to say, when you get objections, there's no need to get objections in this business. The moral story is that you can only help who want to be helped.
That's right. That's absolutely right. That's awesome. All right. So the question is a question: how do I get to the Clubhouse room? I am on Clubhouse under Lady G. So if you do a search for Lady G, you will find me on Clubhouse. Arthur is on there as Arthur Jones. Irma is on there as Irma and Angelica. And then Shantae is on there also as Shantae Singleton. So you can find us on Clubhouse. And then I have a club room. It's called Lady G's Financial Legacy. I'll write that in the chat. So I'll do that. And that is for the people on Zoom that asked that question. Okay. I'm trying to backtrack. Okay, let's hear from, is that, I don't want to butcher it. Is it Artificial? Come on, for Lady in the Yellow.
Greetings, it is Artemisia.
Awesome. Greet us, Queen.
Can you hear me? It says my connection is off.
I think you're coming back. You were sounding like in the Matrix, but I think you're coming back. Go ahead.
Okay, first I would like to thank you all. I appreciate all of this information. And I'm just listening and enjoying it. I do have life insurance on my children and myself. Um, but I haven't changed it. I'm questions. Should I change it? Because my son is 21 now. My daughter just turned 18. So should I change them over to Northwest Mutual with me or leave them over there?
Well, where are they? Are they in a term or are they in a hold?
Oh, dude. I'm not sure.
We got to know what type of policies we in.
I know that when you said that earlier, I emailed my agent at Northwest, and now I'm going to check on my kids at Gerber.
Yeah, because with Gerber, you said they're in their 20s now, 20 something and 18.
Yep, 21 and 18.
Did it double over yet?
Crazy, I don't know.
Because usually with Gerber, if you purchase a life insurance policy on your child, I think by the time I can't remember the age, it's either 18, 21, 23, something like that, it will double. So it might have increased in death benefit is what I'm trying to say. So, but even so, I mean, they're going to get to the point where when they have kids or get married or whatever the case may be, they may want an increased policy. So my recommendation to you is if you want to give them a head start, then have them get it now because this is the cheapest they'll ever see it. Once they have another birthday, the premium is going to go up higher each time they have a birthday. But yeah, because I don't know if I would stick with Gerber to go higher. So they would have to go with another company. But I would look into that. But at least you can take comfort that you made the decision. If God forbid anything happened, they're covered. So yeah, they can increase. They can look into increasing. I know you threw out a company name. I don't remember what it was, but you can definitely look into them getting something else if they want to. Does that answer your question?
Yes. My agent wanted me to bring the kids over, but I wasn't ready to look into that yet. So now I have to. I'm going to do that tomorrow. Thank you, guys.
Thank you. Thank you. All right. Next we have Shane. Shane, greet us. Greet us.
Hello, everyone. Sorry about that. Yeah, so
You want us to come back to you?
no, I'm okay now. I have to turn off that audio that just popped up. Yeah, so I mean they pretty much answered a lot of the questions that I had, so I don't have any additional questions at this time. I was kind of listening to a lot of what everyone was saying on here. And it was kind of, remembering back, to when I went through some of these times because I was also once in, practicing nursing. I was a nurse, and I've had, patients of mine who was in situations like Irma was talking about. So when she was actually, bringing up that point, I was kind of back when I worked in a nursing home, and that happened quite often. There's a lot of the patients that I had, and family members are fighting over who gets to get the information from, grandma and grandpa, or they don't have the policies in place, and then, they're setting up the GoFundMe and whatnot. And, families being angry when GoFundMes are set up because they don't want the public to know that they don't have the money. So, they want to keep it, a hush hush, but, they have the opportunities to set up these policies and they just choose not to. And, you guys talked about so many different things. when Dwayne was mentioning about, the 401ks and the policies for the employees and the employers offering those things. And, I work with a lot of business owners, and, I try to tell them some of those same things. That, you can save on your taxes, you can save with employee retention by offering these 401ks and these policies so that you can keep your employees there and you can write that off. But a lot of times these small business owners, they think they have to be big corporations before they can start reaping the benefits of these things, and it's not necessarily so. And I try to give them examples. I'm like, Microsoft and Apple, they were, big corporations from the beginning, but they started putting these things in place a very long time ago, so that once they grow, the foundation's already there. But people, they just, as I can't remember who was it that was speaking, the guy in the suit that was here, when he was saying, you guys are trying to, I guess, get these people in their policies and they don't want to hear it. They don't have to compare it to. And it's like, everyone's complaining. A lot of people are complaining, yes, we want to get our piece of the pie and our American dream, but then in the end, they're not trying to take the steps necessary to improve and to get those things in place. And, they keep seeing the same thing over and over. This person's crying over this, crying over that, but then nothing's changing. And it's not changing because their circle isn't changing. So it's like the few individuals that are there, you just have to, you're strong enough to come out of that circle, that you just have to take yourself out of that, and a handful's going to follow you. And that's just going to have to be the cycle until enough of us eventually step out of that pool. So that's just my 2 cents that I wanted to throw in there. Thank you.
That was a good 2 cents. What are you talking about? That is a good. That is very good. We can give, we can get something from 2 cents and 1 cent. I wish I can get some people to have 1 cent, but hey, that was great. That was great. Nicole, it is so good to see you. Greet us, Queen. Nicole, are you by your mic or we'll come back to you? If you're talking, you got to unmute. She might be stepped away. Okay. Arletta. Queen, it's good to see you. Come and greet us.
Hi, this is Arletta. I'm a newly licensed insurance agent myself in Georgia, and I'm here acquiring all the additional knowledge I can and picking up on all these gems that are being dropped, and I'm eager to continue to learn and to be able to share it with those in need. Thank you, and I'm done.
Awesome. 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 Nicole, are you back? Okay. All right. So there she goes.
I'm here.
Okay.
I just wanted to say that everything that you guys have been listening to is accurate information. I've done my own personal research, and it's very important to get life insurance on your family members. My children, I've buried about almost 10 people in my family for the past 10 years. And it's not easy. You have to take money out of your pension, your savings, and to cover everyone's death. I mean, I covered my stepdads, my aunt, my brothers. I have 3 brothers. I had 3 brothers. They all are now deceased. My mom deceased. So it's very important to get life insurance on your family.
Yes, it is. It's very, very important. Um, very, very important. Um, I can't stress it enough. No matter how much I say it, if you haven't figured it out now after hearing everything, there's nothing more what I can say. You can't lead a horse to drink. You either choose to or you don't. Um, if there is anyone again in the audience, and I will not take for granted that everyone that's in here knew why they were coming. Today was a little different. We decided to do something outside of Clubhouse because of me being on this crusade. This is Lady G. I am a serial entrepreneur. I have 5 businesses, and one of them is I'm a licensed financial professional, and I'm out in these streets trying to go state by state and get everyone insured. It doesn't, Just stop with me. It takes a village, and I need everyone's help to do it. It's whether it's getting information out and getting your loved ones to me so I can talk to them, or just getting yourself insured, or checking up on your policies and make sure that they're not about to expire and you're about to be out in these streets naked. Um, this is the crusade that I'm on. So what we did today is we held a special session because I had to figure out, how do I get to the people that are not on Clubhouse? And so we decided to do a Zoom. And then I said, well, now that I know I can do a Zoom, how do I not leave out the people in Clubhouse? So we worked it out. We all, us speakers, we have 2 devices going right now. And I think we did a really good job today. We got both going, Clubhouse and Zoom. We had about 20 something on Zoom, and we had about 141 people come through this Clubhouse. And I'm great. And even though I gave the benediction a while ago, there's 13 people still sticking with us on Zoom, and there's about 27 people still on Clubhouse. So I'm thankful that you guys are hungry for it, because I do not want to feel like I'm here for nothing and you're not getting anything from it. A teacher never wants to feel that way. So I can only get the knowledge and then spread it, give it, which is what I'm telling you to do. Don't just keep this to yourself. Get it and pass it on to your family. So if there is anyone left on Clubhouse in the audience that is not on the stage and haven't had a chance to speak, please feel free to raise your hand, come on up. I would love to hear from you. And I'm going to pull this young lady up because I want to hear what she has to say. She ain't raising her hand, but she better not deny me. Come on up, come on up, come on up, come on up, come on up. Come on up. You don't want to disappoint me. There she goes. I would love to hear from the beautiful Nancy. What are your thoughts on the room today, Nancy?
Oh, that was fantastic information. Oh my goodness. You know, this was free. This is what upsets me. This was free information, right? And I'm sure a bunch of people at home watching Ratchet TV, instead of being on Zoom or on Clubhouse, listening to this information that can change their lives. But the people that needed to be in the room was in the room. And I thought the information was good. I got some information about the trust because I really do need to speak to Arthur, because I do have a trust. And but I've always wondered, how do I put money other than properties? Because every property I purchased, I put it in the name of the trust at the time it was purchased, so it didn't have to be transferred. But I always wondered about, how do you get the money in there? And the people that did the trust for me, the attorneys, didn't even give any of that, all the information that Arthur gave. They never gave that information, but they did take for them $2,500. But anyway.
No, they don't teach you how to use it. They don't teach you how to use it intentionally. Yeah, they actually don't teach you how to use it, and it's quite intentional, because they know once a person knows how to use it, you get a lot of benefits. The financial side is only part of it. There are some societal status adjustments that happen when you're operating as a beneficiary or a trustee.
Well, information you and Arthur and Irma and everyone that was giving out this evening was priceless, priceless, priceless. I hope people were taking notes, because I was taking notes, because I was taking notes. I was taking serious notes. This is good information. And also I wanted to ask you, workshop with me sometime.
I think you went into the matrix. So repeat the last line.
I was saying we need to do a workshop together, you and I.
Me and you, or you and Arthur?
You and I.
Okay.
And Arthur.
Okay.
And what?
That's fine.
We should definitely do a workshop together, because look, you can be talking about the insurance, he's talking about the trust, and I'm talking about the real estate.
That's good.
Yeah, I'm just.
That's very good. Let's connect on that. Let's not let that ball drop. Connect.
Yes.
Let's connect. In fact, Nancy, Oh, Nancy, I have your number. So what I'm gonna do is I'll start a group chat with between you and because Arthur's horrible with his back chat with Clubhouse. So we're we're gonna do I'll start a group chat on texting and then we'll get that going because I don't believe in waiting. Opportunity doesn't wait for anyone and we have to get out in these streets. So let's not let a day go by. So yeah, we're gonna make that happen.
Yes, let's make that happen, please.
Yes. In fact, do me a favor, text me now so that before I hit my head to the pillow, I remember to do the group chat.
I will do that.
Okay, awesome. Awesome, guys. Well, this was great. This was really great. Thank you, Eshe, Monique, my Melisha, I sent you a request to come up to the stage. How dare you not come up to the stage? Okay, Antoinette, Libby, 12, Bran, Noreen, Laura, Mitzi, Real, Mahi, Cherie, Carlene. Hopefully I ain't butchering nobody's name. It's after 10 o'clock, y'all. My vision starts to get a little uh, light there. All right, so I think I have followed up with everyone. Oops, I missed someone in the back chat. Um, okay, I'll answer that. So again, this is last call, guys. If you have questions down there, does anyone on Zoom have questions? You can unmute. You don't have to write it in the chat. If you have questions,
Just click that drop down and to go to everybody.
I want to put the. I apologize. I was trying to make sure everybody had the coupon code. It is Lady G for the Trust Masterclass.
Awesome. So does everybody see that's in the chat? In the chat,
Yes.
Guys on Zoom, look in the chat. Coupon code is Lady G. This is just over hours of information on revocable and irrevocable trust. And those that are on the house, let's see how we gonna get you the information. How about you guys write it down? Get a pen and paper right now, and I'm gonna spell it out for you. So in order, if you are interested in getting a hold of Arthur's Trust Masterclass, it's a replay. The link is, you ready? B as in boy, I as in iron, T as in Tom, dot L as in Larry, Y as in yo-yo, and the slash and legacy trust. So that's bit.ly/legacy trust. And the coupon code is Lady G. One word, I believe. One word, Lady G. And this is just over 3 hours of information on the revocable and irrevocable trust. I say take full advantage of it. He's giving it to you for $99. Get to it. When we know better, we do better, and we take advantage of these things because the wealthy do it. Every other community looks out for their people and make sure that their kids gonna have a trust fund, and we're here looking for the unemployment check and government assistance. We just got to do better. I ain't even gonna get started on that again. Anyone else on Zoom have any questions? You feel free to unmute if you have any questions. All right, everybody on Zoom is good. Okay, everybody on Clubhouse is good. All right. Well, again, if you are you back, Melisha? Okay, I think she had to go put the baby. Oh, wait a minute. Let me see. Melisha, you back? Okay, she's probably still putting the baby down. There she go. Melisha, you're putting me through. It's after 10. I can't go through these things after 10.
Yeah, I don't have any questions. I'm grateful. I'm thankful. It was phenomenal. You all are doing a great job. When the next master class happens, you make sure you keep it going because the people need to hear it again. And, I'm going to be in touch with you and Arthur as well. So thank you.
Awesome. Awesome. I love it. I love it when you get something from it. Um, the full link again, someone just sent it in the back channel. They did not get the full one. It is B as in boy, it.ly/legacy trust. So that's LEGACYTRUST. Good night, Sylvia. Thank you for joining the room. Um, I can't hear any longer. Okay, wait a minute. What's going on? Can everybody else hear me?
I can hear you.
Okay, so I'm not sure why you can't hear me, Arletta. How about I'll just write it in your back channel. Hold on. BIT dot legacy trust. Okay. So yeah, so you guys, if you again need a policy, hit me in the back channel. I'll send you the link. It would not, Clubhouse wouldn't let me post a link on top of the room to make it easier for you guys, but I will answer you in the back channel and send you um, that to set up, and then we can get you some quotes and get you insured. If you do have a policy, hit me in the back channel so we can at least review what you have and make sure it's working for you and that you actually know what your policy you're in. I had someone come to me and I said, okay, what type of policy you have? They didn't know. I said, okay, describe the policy. So they described it. So I said, you're in a term policy. No, I'm not in a term policy. It's not a term. When I signed on, it was told to me that it's permanent. Um, okay, well, from what you telling me, you in a term. I said, go find the policy and then get back to me. Next day, I get a message. Oh my goodness, it is a term. How is you telling the professional what you have? I'm just confused. So I said, okay. She says, and I thought it was permanent. This is about to end soon. Had she not been in the clubhouse room and heard me say, check your policies, she didn't even know her policy term was about to end. I'm so done. Y'all need to check your policies and know what type of policies you're in. What's working for you, what's working against you? Is it going to expire when you're 80 or you're covered to 121? Do you have some terminal illness riders on there, critical, chronic, or are you out there without a ship and a sail? Are you building for retirement, or do you just have enough to be able to buy gas money if you need to? Gas. So we need to know more. And do better. So I am going to do this. I'm going to let Arthur first have his closing remarks, and then I'm going to have Shante come and give her closing remarks. Um, I think Irma is still on Zoom, so she can give her closing remarks, and then I'll follow behind and close this out. But yeah, let me hold the rest. Go ahead, Arthur.
Okay. Well, I'm gonna close and keep it kind of simple. I just want to close with this. I want everybody to get in the mindset of own nothing, control everything. Get in the mindset of own nothing, control everything. We have to get on our trust game, people. We got to get on our trust game because it's not about you. It's about everybody to come behind you, and you have to keep what you kill. And with that, I'll close.
That's good. That's good. That's like drop the mic. All right, Shantae, greet us and give us your closing thoughts.
Hello from everyone. For my closing remarks, I just want everyone to know that if you don't have life insurance, get that ASAP. Death doesn't wait on no one. And if you have a policy and you need that reviewed, get with us. You can hit me in the back channel. You can go to my page at it's on my profile, www.shantae10k.com, and we can go over your policies and get you some quotes If you have children, again, make sure you get your children insured. If you have any questions, contact us. And I relieve the mic.
Awesome, awesome. Irma, she may or may not. Irma, you by your mic on Zoom? She may have stepped away. Um, okay, so first of all, I'm trying to get to everybody in the back channel before I close out this room. Um, First of all, I want to thank Arthur. I want to thank Shantae. I want to thank Irma because I could not do this alone. And you guys, where I may not have pointed something out, you guys picked it up. And that's what teamwork is all about. I thank God for Clubhouse. It has its flaws, but it does have its good stuff, and we would not have connected had it not been for Clubhouse. So I'm thankful for that. I'm thankful for where I know that God is taking us, and that we are going to um, we're going to change the world, because where He leads me, He will guide me. And I'm not on this crusade for nothing. And as long as He strengthens me, I will continue on. I think I'm almost done. Everyone that's hit me in the back channel, you should see my response. Um, um, yes, that is a term policy. Um, yeah, so you need to look at that, because by the time that expires, you're gonna be older. So yeah, I just responded to you also. Um, and Again, you guys go and follow Arthur. Hit the bio pics on my bio, my profile pic, Arthur's profile pic, Shantae's profile pic. Irma dropped out, but if you go look for her, it's Irma Angelica. But I was so appreciative to have these young women and men on the stage with me to help me uh, continue this crusade. So I think that is all I have. Follow Lady G's Financial Legacy. Follow me so that whenever I open a room, you can go with me through this journey and get more people in here also, because there is a whole lot of ground to cover. We've insured people in over 10 states, and there's more states on the map. So we got a far way to go. So we can do this. We can do this. And if I keep looking at this back chat, I'm never going to close this room down. So um, thank you, thank you, thank you, thank you. Okay, so guys, again, my thanks to my speakers. Look forward to seeing another flyer come up after the holidays, not after this holiday, after Thanksgiving. We're going to do another informative session, and I'm not sure what the third topic is going to be, but it will be life insurance again, and we're going to have a speaker on health insurance, and I'm going to figure out a third topic just because I like the threes, one for the Father, Son, and Holy Ghost. So I pray the blessings of the Lord on Zoom and in Clubhouse be upon each and every one of you. May He keep you from all sickness and disease. May He keep you covered with His precious blood. You guys get a double blessing, because yes, I do know I prayed earlier, but because y'all stuck around, you get the double overflow. So may He open doors that you didn't even know could be open, and may He shut doors that need to be shut. May He put you in the right path to do what He has in line for your life. And may you go by His leading and not your own. Because when you go by your leading, you can mess things up. But when you go by the leading of the Lord, where He leads you, He will provide. Thank you again, everybody. And this room will be closing in 5, 4, 3, 2, 1. Amen. Have a great night, everybody.
Amen. Thank you.
Amen. Good night. Thank you.
Definitely.
All right, you guys on Zoom, good night. Thank you for coming. Love and appreciate you all.